Ask me for the upside.
Thank you for again. I will join in the choir. Thank you for a very interesting institutional analysis. And I have one comment. I was expecting you to talk also about Western corruption. The revolving doors between the Minister of Finance and the big banks in the US, the enormous corporate money feeding into election campaigns, etc. It must certainly be a problem if you want to repair the Western economy. But my main question is, you have touched on the economy here, the basic economics. You're talking a little bit about the financial sector. But what we've seen over the last 25 years is, of course, a massive outsourcing of European and American industry, and with that, the basis for the middle class, so to speak. This is, also, of course, on the other side, being the dynamo for export-led growth in China and other countries, and repeating what Japan did before. That epoch will, to some extent, come to an end. In the meantime, of course, we went into a financial spree that exploded. But there is a period emerging when, presumably, there will be a rebalancing of the outsourcing spree. What is your comment to that? Will we then be seeing more balanced industrial economies around in the West and the growing East, with more adjustment to normal? And as I say, there is no scandal in some kind of equality across the board. Is that where we should end up if we have good institutions and functioning markets?
Thanks very much for those two excellent points. I'm actually going to make a request to Ulrich. Is there any way of opening some windows? Because I know saunas are popular in this part of the world, but I always thought it was something that you did, naked rather than in a suit. I can't, like President Obama, take my jacket off because I have a microphone attached to it. So I'm kind of the issue of crony capitalism, which was something Americans loved to accuse Asians of in 1997, has come back to haunt the United States. And had I had more time, I would have talked about that, as I do in the book. Part of the measure of rule of law that I discussed from the World Economic Forum includes measures of corruption. The World Governance Indicators are also very damning on this. So are the data from the Fraser Institute. The US has become a corrupt country. You could say it's become a Latin American country, except that some Latin American countries have actually been improving institutionally, even as the US has been getting worse. And nothing, again, illustrates the plight of conservatives more than their inability to use terms like crony capitalism to criticize what has been going on between Washington and Wall Street. Since Wall Street was able to buy both parties, it's extremely hard to make that argument. But my own view has been for really longer than the crisis. I wrote about this in The Ascent of Money, that the relationship between Wall Street and Washington is really toxic. And there is, at this point, no sign of any improvement in that regard. Indeed, Dodd-Frank was largely written by the lobbyists and their creatures in Congress. It's an extremely depressing thing because that explains the complexity of the legislation. There's a nexus between complexity and cronyism. If you make regulation really complicated, then only the big guys can actually understand how to navigate their way through it because they have the compliance department and they have the lawyers. Goldman Sachs isn't worried about Dodd-Frank. The people who are worried about Dodd-Frank are the people who want to start new banks. It's almost impossible to do because the entry barriers to new banks are unassailably high. The too big to fail institutions monopolize the free money from the Fed and they have the regulatory thing completely down. So it's a huge and deeply worrying problem, and it is the kind of problem that will be very, very difficult to solve within the existing political system. Again, you need the Thatcher factor. You need the kind of politician who will lead against even the people who finance the campaign. In the United States, it probably needs somebody prepared to be a one-term president to do this stuff. But if it's done right, it's a two-term presidency. On your broader question about global rebalancing, let me half agree with you. Part of what we are seeing in the Great Reconvergence is a rebalancing, and part of what the financial crisis has done has been to accelerate that process in a number of ways. Number one, it's forcing countries that ran very large current account deficits to stop doing that. And most analysts saw those deficits as the biggest global imbalances that we should worry about. Two, the crisis is actually pretty much ending the China price, that plus the demographics in China. So if you look at patterns of outsourcing, the tide already has turned, and quite a lot of manufacturing jobs will be created in North America. I include Mexico in that because Mexico can now, in fact, compete with China, which it really couldn't do for more than 10 years. So this rebalancing is, in your sense, I think, happening. But there's a big caveat. At the Bank of International Settlements conference the end of last week, I was involved in an interesting discussion about capital flows. And you need to make a distinction here between the current account deficits and surpluses, which everybody used to fixate on, and the capital flows, which are only partly linked to those. Planet finance is still very big. This was a term I used in my book, The Ascent of Money. This huge superstructure of financial institutions, ranging from banks, through funds, through sovereign wealth funds, all the way to the derivatives market, is enormous in relation to the global economy. And indeed, nothing has really altered that relationship. Capital flows dominate current account surpluses and deficits. And these flows at the moment are moving very rapidly in new directions. The market action that began really a few weeks ago when Ben Bernanke first hinted at tapering quantitative easing are going to cause huge disruptions in the coming weeks as markets readjust to a new monetary environment. I would say the collision between the Fed, the People's Bank of China, which is trying to tighten shadow banking, the Bank of Japan, which is pursuing an aggressive currency depreciation strategy, and the ECB, which is essentially gridlocked by European politics. This combination is pretty horrible in terms of what capital flows will do in response. And we will see some further very big moves in markets as capital is reallocated to take account of these different forces. Hold on tight, because very few markets will be unaffected by this. And indeed, smaller economies will be buffeted a great deal as currencies, stock markets and bond markets try to find a new equilibrium. So the world may look more balanced in some ways, but believe me, it isn't.